What is good, YouTube? Churn FX back again. Listen, if you have a small account which you are trying to flip this coming weeks, make sure you watch this video to the end. And also, if you're trying to pass your funding challenge this coming weeks, make sure you watch this video to the end, because somewhere in this video, I'm going to break down a 200 pip move on this pair. I repeat, somewhere in this video, I'm going to break down a 200 pip move on this pair. So make sure you stick around and watch this video to the end. And also don't forget to subscribe, man. Don't forget to subscribe. Hit that like button. Drop a comment down below. Turn on post notifications and share this video with your family and friends. And also, if you are interested in my one-on-one mentorship, DM me on Instagram. The link is in the description below. Alright? Just DM me. So with that being said, let's just get to business. So taking a look at Euro NZD or Euro New Zealand dollar, what do we need to do first? First of all, we need to identify our trend. I've always said this. First of all, we need to identify our trend. And looking at our chart, what trend are we in? We are in an uptrend. How do we even know we are in an uptrend? So all what we need to do is to identify our market structures. Alright. So let's start from here. So at this point, we can see price created this lower high, which came back down to create a lower low. Alright. After this lower low was created, what did price do? It went back ahead to create a new higher high. At this point, we can see price has changed from bearish to bullish. Why? Because it created a new higher high. You get me? Why is this even a higher high? Because this high is higher than that of this high. You get me? Good. So after this higher high was created, what did price do next? It retraced a little bit to create a higher low. Why is this a higher low? Because this low is higher than that of this low. You get me? Good. So after this higher low was created, what did price do? It continued back to the upside to create a new higher high. Why is this a higher high? Because this high is higher than that of this high. Okay, so after this higher high was created, what did price do next? It came back down, or it retraced back down to create a new higher low. Okay, after this higher low was created, what did price do next? It rallied back up again to create a new higher high. Again, why is this a higher high? Because this high is higher than that of this high. Not just because it's higher than that of this high, but also price closed above it. That's why this is considered as our new higher high. Alright. So after this higher high was created, what did price do next? It came back down, rejected this higher low, pushed back up, came back again, rejected, pushed back up, came back again, and finally they went back up and created a new higher low. Somebody may ask, why didn't I consider this as our new higher low? Because this structure right here never closed below the wick of our higher low. It just rejected it. So price closes below, or so price closes above a structure level. It's not a break of structure. To me, it's not a break of structure. You get me? Good. So from here, we can see that this higher low is higher than that of this higher low. So this becomes our new higher low. So after this higher low was created, what did price do again? It went back up, closed below its previous or higher high, and created what? A new higher high. You get me? So from what I've just done, we can see that price is creating a series of higher highs and higher lows, which tells us that we are in a what? We are in an uptrend, or we are in a bullish trend. Alright? So now let's go to the H1 time frame, and let me teach you all, or let me put your game, and let me give you all the source. But now I cut a little sum on this retracement. So coming down to our H1 time frame, alright? If I'm to go back in time to this point, okay, what can we see? We can see that price is trading within this channel right here. Yeah, we can see that price is trading within this channel. Okay. And from my experience, okay, there was no way I was going to take a trade after the breakout of this channel. You want to know why? Because looking at the channel very well, we can see that there's a possibility that price is creating what? An inverse head and shoulder pattern. Okay, so all what I did was I'm only going to take a trade only if price is able to break above this resistance. Do you get me? But in case price gets to that resistance and rejects it, it means price is coming to form its what? Right shoulder. Right here. Do you hear what I'm saying? I repeat, I'm going over again. What I'm saying is, under normal circumstance, okay, under normal circumstance, if price is to break out from a channel like this, you are good to go in for buys. Okay, but from my experience, what I can also see is price was what? Creating what? An inverse head and shoulder pattern. You get me? So all I told myself was, I'm only looking to enter, though price has broke out of this channel, I'm only looking to enter for buys only if we break above this resistance right here. That's when I'm only looking to buy. Or that's when I'm only looking to go in for longs on this pair or on this trade. But in case price gets to this resistance and gives us a bearish confirmation candlestick, I'll go in for sales because it's likely that price is about to create its other half of the chart pattern, which is the right shoulder. Okay, so then if I get the confirmation candle, all I'll do is I'll enter the trade right here. Okay, put my first take profit right at this left shoulder. And in case price gets here and fails to create the right shoulder and breaks below this left shoulder, where will my second take profit be? It will be at this low right here. This is where my second take profit is going to be. You get me? So that was my thought process when taking this trade. Alright, so now let's forward it to see what price did. when it got to that resistance. Boom. So after price got to that resistance, did we break above it? Did we break above that resistance? No. What candlestick did price give us after the bullish candlestick got into the zone? We had what? A shooting star candlestick, or an inverse hammer candlestick. Okay, but that wasn't enough for me to enter this trade. All what I did was to wait for price to print a next candle or a second candle. And what candle did price print? It printed what? A bearish candle. Okay, it printed a bearish candle. Looking at these two bearish candles, if we are to add the volume of these two bearish candles, we can see this. We can see that the volume will engulf this bullish candlestick. You get me? So after price printed this bearish candle, that's when I went in for shorts. Placed my stop loss right above the wick of our shooting star or our inverse hammer. Okay. And my first take profit at our left shoulder level. And where will our second take profit be in case price gets to this level and fails to create the right shoulder? Or where will our second take profit be in case price breaks below this level? This is where our second take profit will be, at this level, at this support level. Okay, so now let's continue to play to see how it played out. As simple as that. As simple as that. Take profit just got smashed. Do you get what I'm saying? Take profit got smashed. As simple and easy as that. In case you don't understand anything I did, please replay the video. I watch it over and over again till you understand. You get me? So this is how I caught, about 100 pips on this retracement. Alright, risking 30 pips to make 109 pips, which gives me a risk to reward ratio of 1:3.64. As simple as that. Alright, so now let's get to the 200 pip move. The 200 pip setup I was talking about earlier on. Alright, let's get into it. Let me clear all this so we have a clean chart. Let me clear all this so we have a clean chart. Alright. And let me also zoom out so it becomes clear. So going into next week, what are we looking at? Of course, we are expecting price to break out of this channel. Yeah, that's the first thing we're looking at. We are expecting price to break out of this channel. But not just break out. After price breaks out, we are expecting it to retest this resistance again as support. After this resistance is retested, what will we be waiting for? We'll be waiting for a confirmation candle for us to go in for longs or buys. You get me? In case price fails to retest this resistance and comes a little bit down, we expect price to retest this resistance too. Right here. In case price fails to retest this first resistance and comes down, we expect price to retest this resistance. I think retesting this resistance will be much better because at the same time, we'll be retesting the trend line. Again, we'll be retesting this trend line. Again, so after we retest this resistance / trend line, what next will we be waiting for? We'll be waiting for a confirmation candlestick a bullish we'll be waiting for what? A bullish confirmation candlestick. Alright, for us to go in for longs. So please take note. Alright, this one we'll be looking for going into next week. And also, like we saw earlier on, our H4 is in an uptrend. We saw that series of, higher highs and higher lows being created, telling us our H4 is in an uptrend. Or also, as we can see, our H1 is also in an uptrend. You get me? So if I'm to take my Fibonacci and draw from this higher low to this higher high, we can see that price created this double bottom at our At our golden zone, which is our 61.8% level. You get me? So in case price is to rally up and get to our higher high, which is also our Fibonacci 0% level, and this higher high can hold price, and price breaks above this higher high, where will be our next target? Our next target will be our Fibonacci negative 27% level. Again, this will be where we'll be targeting next. Alright? Yeah, this will be where we'll be targeting next for our take profit, probably our second take profit. You get me? So our first take profit will be at our 0% Fibonacci level / our higher high. And our second take profit will be at our negative 27 Fibonacci extension level. Alright? So take note. And if you are to measure from that resistance, or if you are to measure from the breakout of the channel to our negative 27% level, because you see price will move about 238 pip. Yeah. So we are expecting a 238 pip movement after the breakout of this channel. Again. And also, I have something to tell you. As much as a trade might look right or look good, it could lose. I repeat, as much as a trade could look right or could look good, it could lose. So all you need to do is you need to apply proper risk management. Do you get what I'm saying? Yeah, you need to apply proper risk management. That's what we need to do. Or that's what you need to do. Alright? So taking a look at GBP USD, alright, or Great Britain Pound United States Dollar, we're on the 4H time frame. Alright? So looking at the chart, what trend are we in? What trend is the market in? Looking at the chart, we're in an uptrend. How do we know we're in an uptrend? Because the market is making what? A series of higher highs and higher lows. You get me? I repeat, we are in an uptrend because the market is giving us a series of higher highs and higher lows market structures. Alright, so now let's dive into the chart and identify our higher highs and higher lows market structures. So starting from the left, what do we have here? We have a higher high being created. Price came back down to create what? A higher low. After this higher low was created, what did price do next? It went back up to create a new higher high. Why is this a higher high? Because this high is higher than that of its previous high. You get me? Good. So after this higher high was created, what did the market do? It came back down to create a new higher low. After this new higher low was created, what did the market do again? It repeated its move, went back up to create a new higher high. After this higher high was created, what did price do next? Came back down to create a new higher low. Why is this a higher low? Because this low is higher than that of its previous low. Good. So after this higher low was created, what the price do? It continued back up to create a new higher high. Do you get me? Alright, so after this higher high was created, what the price do again? It came back down to create a new higher low. Why is this a higher low? Because this low is higher than that of its previous low. Do you understand? Alright, so after this higher low was created, what the price do next? It came back up, came back down to create a new higher low. After this higher low was created, what are we expecting price to do? We are expecting price to go back up and create a new higher high. Why is this a higher high? Because this higher high is higher than that of this high, or is higher than that of its previous high. So after this higher high was created, what the price do? It came back down to create a new higher low. Why is this a higher low? Because this low is higher than that of its previous low. So after price created this higher low, what did it do again? It came back up to create a new higher high. Alright, after this higher high is being created, what are we expecting from price next? To come back down to give you a higher low and continue back up since you're in an uptrend. Do you get me? So that's how we identify our market structures on the H4 time frame, or that's how we identify our market structures on any pen or on any chart. This is how we identify our market structures. Alright? So looking at the chart, where is price trading within? We can see that price is trading within this higher low good. We can see that price is trading within this higher low and this higher high. Alright? So in this video, what I'm about to teach you is how I was able to catch this continuation on GBP USD. I'm about to teach you guys how I was able to catch the continuation of this move right here. Alright, so now let's go to the H1 time frame to do what? To look for our entries. You get what I mean? After we've identified our market structures on our H4 time frame, what we do is we go down to a lower time frame, which is our H1 time frame, to look for our entries, so we can also ride the trend. Do you get me? Good. So now let's go to our H1 time frame to look for our entries. So coming down to the H1 time frame, right? What do we need to do first? Same thing we did on the H4 time frame. I first need to identify our H1 market structures. We've already established that our H4 was bullish. Why? Because it was giving us a series of higher highs and higher lows. So that's what we are expecting on the H1 time frame. We are also expecting the H1 to be bullish. Since the H4 is bullish, we are only looking to buy. We are not looking to sell. We are only looking to buy the market, not to short or to sell the market. Do you get me? So first thing, what we do on the H1 time frame is to identify our structures. So starting from here, right? What can we see? We can see the market gave us a higher low right here, which led to give us the H4 higher high. Do you get what I'm saying? But within this higher low and higher high, the market was creating what? A series of lower highs and what? Lower lows, which led to the break of what? The H1 what? Higher low. Do you get me? Let me go over. What I'm saying is, we first need to identify our H1 or market structures. And starting from here, what can we see? We can see the market created this higher low, which led in creating the H4 what? Higher high. Do you get me? After this higher high was created, what do we see? We see a series of what? Lower highs being what? Created. And this lower highs led to the break of what? This H1 higher low. So now at this point, the H1 is what? Is bearish, not bullish. You get me? But our higher time frame, which is our H4 time frame, is telling us that we are bullish. So we can't go in for sells. We need to go in for buys. But since the H1 is bearish, what do? We wait for the H1 to also turn what? Bullish. Do you get my point? The H4 is bullish. But when we come on the H1 is bearish. So how do we go in for buys? We wait for the H1 to also turn what? Bullish. That's what I'm saying. Alright? So from here, how does the H1 turn bullish? All what we need to do is to wait for price to come above and close above our H1 what? Lower high. Do you get what I mean? I repeat, how does the H1 turn bullish? The H1 turns bullish by coming back up to break above its previous lower high to create a new higher high. After this higher high is created, what do? We wait for a retest of this lower high, which is serving as a resistance. So we wait for a retest of the lower high as a support, and we buy the market back to the upside. Do you get what I'm saying? Good. So now, let's play the market to see if we get what we just said. Boom. Perfect. Right here. So at this point, what did price do? Price closed above the H1's what? Lower high. So now this becomes what? The H1's new what? Higher high. Do you all get me? And this higher high signifies what? A bullish market structure. I remember this lower high is also serving as a what? As a resistance. So what are we expecting price to do? Like I said earlier on, we are expecting price to retest this resistance as a support and continue back to the upside. Alright? That's why I said, and if you are to extend our zone, our resistance zone to the left side, we realize it cuts through all this resistance. So there's a resistance, there's a resistance, there's a resistance, there's a resistance. You get me? So there's a very strong zone for price to retest or for price to bounce off and continue to the upside. So after we've had our shift in structure on the H1 time frame, what do we do? What do we wait for? We wait for a retest of our resistance and get a confirmation candle, then go in for our buys. Do you get me? Good. First rejection, right? Look at what price did. When price tapped into that zone, what did it do? It rejected with this candle. Let me zoom in for you to see. When price tapped into our resistance, you pay attention, man. When price tapped into our resistance or when price retested our resistance, what did it do? It rejected, telling us that at this point, buyers are in the market. At this point, buyers are taking control of the market. So do we just enter after this rejection? No, we don't. What do we wait for? We wait for a bullish candlestick pattern. I repeat, do we just take our buys after we get a rejection? No. But then what do we wait for? A bullish or candlestick confirmation. Then we go in for buys. Alright? So let's continue to see if we get a bullish candlestick confirmation. Boom. Right here. Right here. Who can tell me what candlestick is this? This is what we call the bullish engulfing candlestick. Why is this a bullish candlestick? Because the volume of this candlestick is more than the volume of this bearish candlestick. You get it? So now we see it's engulfing the other candle. It's engulfing the red candle, which signifies our bearish candle. You get me? So this signifies that at this point, at this exact point, buyers are in control of the market. So after we get this bullish candlestick, that's what we do. What we enter the trade. We go in for buys, right? So this is where I enter my trade. Place my stop loss below our rejection, and I take profit to the edge forward higher high, which is this zone right here or this level. This is why I place my take profit, which gives me a risk to reward of 1:3.7, risking 21 pips to make 79 pips, like 80 pips. Again, so now let's continue to see what price does. Boom. As simple as that. As simple as that. Price just moves for our take profit. You get me? Without any drawdowns. Flies to our take profit. Price just flies to our take profit with no drawdowns. You get what I'm saying? As simple as that. Do you all understand how we analyze from the H4 to the H1? As simple as that. In case you don't understand anything I did, go back and replay the video. Rewatch the video till you understand what I did. Alright? This is a simple break and retest strategy. Alright? Alright, so taking a look at GBP CAD, British Pound, Canadian Dollar, we are on the 4H time frame. What do we need to do first? Like I've always said, the first thing we need to do is to identify what trend. What did I say we need to do first? We first need to identify our trend. And how do we identify our trend? By identifying what our market structures. Alright? So now let's go back in time and identify our market structures, yeah? Alright, so now at this point, what the price do at this point, it created a lower high. Alright? It created a lower high. After this lower high was created, what did it do next? It came back up to create a new higher high. After this higher high was created, what the price do? Came back down to create a new higher low. Why is this a higher low? Because this low is higher than that of its previous or higher low. Alright? After this higher low was created, what the price do next? It came back up to create a new lower high. After this higher low was created, what the price do next? It came back up to create a new lower high. After this new lower high was created, what the price do next? It came back down to create a new lower low. Why is this a lower low? Because this low is lower than that of its previous lower low. Yeah. After this lower low was created, what the price do next? It went back up to create a new higher high. Why is this a new higher high? Because this high is higher than that of its previous lower high or its previous high. After this higher high was created, what the price do next? It came back down to create a new higher low. Alright? Also, in this higher low, within this higher low, what the price do, it created what? A double bottom. Alright. After price created this double bottom slash higher low, what did it do next? It went back up to create what? A new higher high. Why is this a higher high? Because this high is higher than that of its previous high. You get me? So after this high is created, what are we expecting next from price? We're expecting price to come back down to create what? A new higher low. So we continue back up to create what? A higher high, higher low, so on and so forth. Alright? So now looking at the structures we've identified, we know price is in an uptrend. You get me? We know price is in an uptrend. So after I've identified my H4 market structures, what do I do next? I go down to my H1 time frame to look for my entries. What did I say? What I said was, after I identify my H4 market structures, I go down to my H1 time frame to look for my entries. So now let's go down to our H1 time frame to look for our entries. Alright, so now coming down to the H1 time frame, what do we need to do first? Same thing we did on the H4 time frame. We first need to identify what are H1 market structures. Alright, remember on the H4 we had what? Bullish market structures. So that was the same thing we're expecting on what? On the H1 time frame. Alright, that's the same thing we're expecting on the H1 time frame. If the H1 time frame is giving us bearish market structures, we are not taking any trade. We are only looking to buy. We are not looking to sell. So till the H1 market structures shift from bearish to bullish, we are not taking any trade. Alright? Good. So now let's go back in time and let's see. If you are to look at this angle, right? If I'm to draw this zone, if you are to look within this zone, what do we realize? We realize within this zone, price was creating a series of lower highs and lower lows on the H1 time frame. You get me? Lower highs and lower lows on the H1 time frame. So when did price shift market structure from lower highs and lower lows to higher highs and higher lows? Or when did market structure shift from bearish to bullish? It shifted when price closed above this last lower high. Yeah, I repeat, price shifted structure from bearish to bullish when price was able to close above this last lower high. You get me? Also, this last lower high was also serving as a what? As a resistance level. Alright, this last lower high was what? Was also serving as a what? As a resistance level. Alright, so when price broke above it, what did price do next? It came back to retest it as a what? As a support. I repeat, when price broke above it, what did price do next? It came back to retest it as a what? As a support. Do you get what I mean? So now I'm about to show you exactly how I got my entry. So you all pay attention. Yeah. So within this, let me clear this. Good. So within this consolidation, I know some of you will say it's a consolidation, right? And you're all right, there's a consolidation, but I didn't look at it from that angle. What I did was take my trend line, right? Draw from point A to point B. You get me? Draw from point A to point B. Take a second trend line, draw from point A to point B. What do we see? We see a chart pattern for though price was consolidating. But within that same consolidation, price was forming what? A chart pattern, which is the ascending triangle chart pattern. Here again, this chart pattern is called the ascending triangle chart pattern. Alright. So all what I did after I've seen this chart pattern was to wait for the breakout of the chart pattern. You get me? So can we see the breakout? Yeah. Price broke out with this bullish momentum candlestick. So as soon as I saw price close with this bullish momentum candlestick, what did I do? That was when I entered my trade for longs or for buys. Alright. Place my stop loss right below this candlestick. And my take profit to this edge forward. To this edge forward. Higher high. You get me? I place my take profit to this H4 higher high level. As simple as that. As simple as that. So this was how I was able to make 140 pips just on this trade. But if I was to hold longer, I would have made about 220 pips. You get me? So this was how I was able to capitalize on this trade, which gives us a risk to reward ratio of 1:3.71. You get me? Risking 37 pips to make 137 pips. As simple as that. As simple as that. I hope you understand what I just did. Yeah. As simple as that. In case you didn't understand anything I did, please go back and rewatch the video to understand. Please go back and rewatch the video to understand, in case you didn't understand anything. And like I said earlier on, if you're interested in catching moves like this, just DM me on Instagram to enroll in my one-on-one mentorship. The link is in the description below. Alright? And if you also haven't yet subscribed, make sure you hit that subscribe button. Make sure you hit that like button. And make sure you drop a comment down below rating this video from 1 to 10. Alright? Rating this video from 1 to 10. So with that being said, I'll see you in the next video. Char on FX. Peace. I'm out.